Before I explain what pin bar candlesticks are and demonstrate the power of them, I think it's worth just taking a bit of time to give an overview of Japanese candlesticks. So each candle has an opening price and a closing price. So if this was a 15-minute candle, this candle could have opened down here at 3:15. At 3:30 it would have closed. And the difference between the opening and closing price creates a candle body. Now, by default, a lot of charts have green and red candles to represent bullish and bearish candles. So I've kept in line with those defaults. But these candles can really be any colour. If the closing price is higher than the opening price, then you would have a green candle or a bullish candle. If the closing price was lower than the opening price, a red candle would be created, or a bearish candle. Candles can have wicks, an upper wick and a lower wick, and these wicks are footprints of where price was during the duration of the candle. So even though price closed here, during the time of this candle, price was up here and price was down here. So candles let us know of the opening and closing price, and they also let us know where price was during the length or duration of the candle. So let's look at some real life Japanese candlesticks. This is a chart of the British pound against the US dollar, and it's a 4-hour time frame. So each of these candles represent 4 hours of price data. If we zoom in to get a better look at these candles, so after a 4-hour period, this candle would have opened here, and once 4 hours would have passed, it closed here. You'll notice there's a wick down to here and a tiny wick just at the top here. So price opened here, it closed here after 4 hours, and price was down here and was slightly bullish for a time. So after our 4 hours, this candle closed, and this one opened here and closed down here. Price was up here at some point during the 4 hours, and it was down here. Price then opens here. After 4 hours, it closes here. Price was up here, and it was down here. So what are pin bar candlesticks? Pin bar candlesticks are identified by their long wicks on one side of the candle, and they have a small body. Pin bar candlesticks are identified by their small body and a large wick on either the upper side or lower side of the candle. For example, this candle has a very small body and a long lower wick. This candle has a very small body and a long upper wick. It doesn't matter if there is a small wick on the other side of the body, as long as there is a long wick on one side of the body and the body is small. If the long wick is on the lower side of the body, this would be a bullish pin bar. If the long wick is on the upper side of the candle body, we would refer to that as a bearish pin bar. So why are these pin bars so important? Well, they tell us that price opened here and closed here, but more importantly, they tell us that price was all the way down here, but because of strong buying power or bullish power, price has moved from down here all the way up to here. So buyers are really coming in and pushing price on the upside. Where with a bearish pin bar, obviously price opened here and closed here, but more importantly, price was up here but has been pushed down by strong selling or bearish power. Pin bar candlesticks can act as a signal of price reversing. With so much buying power coming into the market, price could move in an upwards direction. With so much bearish or selling power coming into the market, price could move in a downwards direction. And let me explain further with a price chart. So this is our pound against the dollar 4-hourly chart again. Price is moving on the upside, and then we've had this strong, sudden, bearish movement. Now before this sudden movement, there is a bearish pin bar. Let's zoom in. We have our typical small body and long wick on one side of the candle. There is a small wick on the lower side of the candle, but the two characteristics of a pin bar are a long wick on one side of the candle and a small body. So this bearish pin bar on this occasion would have been a good signal to sell or place a put. We have some very strong pin bars here. Price has come up, and then we have this very large pin bar, small body, very large wick, another bearish pin bar, a signal to sell, and price falls on the downside. Price is coming on the downside, and we have a bullish pin bar, a small body and a large wick, and then price goes on the upside. We have another bearish pin bar up here. Prices come up, we get this pin bar, and price goes on the downside. Just like every signal that can be used to trade financial markets, pin bars do not work 100% of the time. For example, we have a pin bar here, a bullish pin bar, but price continues to fall on the downside. But when we combine pin bars with other signals and indicators, they can act as a strong signal when speculating where future price is going.